Hey, good morning, everyone. It's Coach Chris coming at you Sunday morning, October 20th, 2024. I'm back. I apologize about being gone last week, but I just had a lot of things like all of us do, both in my personal life and my business life, that just kept me away from making videos. And I made a decision to put my family first, and that is what I did. And so I am back now, and let's get into the markets. First, I want to start by going over last week's market. It caught me a little by surprise, both the size of the movements and some of the directions of the movements. And we'll see that in a minute here. I mean, it was a pretty wild week, and without a lot of news driving it. So I don't know if people are just positioning themselves before the election, or they're still positioning themselves due to interest rates, but a lot of things going on here. So let's just start here. I've got my ES channel. So this is the S&P 500 ES futures, MES futures, starting here on Sunday, the 24th of October, or Sunday, the 13th of October, when the markets opened last Sunday night. Came out nice and calm, and then you can see here about 4:30 Central Time, we're starting to see some price movements, and price starts drifting up. And there was no major news announcements scheduled in the United States and all of a sudden we hit the New York Open, and it was off to the races. And you can see the way that this system works is this blue line is our basis line, and that's where price likes to revert to. Think of it as almost like VWAP or something similar to that, where the price likes to retreat to that or stay around that region. And then as the market increases or decreases, we get added volatility. When the lines are nice and horizontal like this, that means there's not a lot of volatility in the market. And what the system does is, once the price deviates too far from the basis line to these green lines, we enter the market with the design that the price will revert back to this blue basis line. Well, you can see here when the market opened how the volatility immediately hit the market, as did the price, obviously. And it drew all of these bands to the upside. And so we are already way above this basis line here, which is about usually 10 to 15 points. And on the S&P, that's a good measurement. And you can see at the open how this thing skyrocketed, got up to the second deviation line, the second green line, and it just kept climbing and pulling everything up with it. And just to give you an idea, so we were already up about 15 points. It increased another 15 points and ultimately went up as high as over 50 points, which that's a 1% move, So, and it never ever, until the close of the market that day, it never retreated, which is very unusual. So overnight, things kind of leveled off. Now we're going into early Monday evening and into early Tuesday, and you can see things leveled off. Look at how nice and horizontal these lines are. And guess what happened? We hit the market open on Tuesday, and now the move was in the complete opposite direction. And you'll see on the NQ, I mean, it was huge. You can see here the market opened and it just literally plunged. And as I said, anytime that happens, it brings a lot of volatility into the market, and it brings these bands down. And we want to stay away from trading activity like during those times, because what we want is we want it to come down just to either one of these green lines and then retreat back down and take advantage of that oscillation up and down. But when it just goes in one direction like this and never retreats back, and the market closes, we cannot take advantage of that retracement in either direction. And you can see ultimately here, This red line is our stop out line. You can see here late in the day, just before the market, the New York session closed, you can see here at 2 times it wicked down into that area. And so then we start out Tuesday night. Here's the market open Wednesday, and it was basically one direction up again. And we did have a little retracement. This never made it to that first deviation line or down to this first deviation line. It kind of came down prior to the market went up, and then leveled off only to slowly grind its way back up. Thursday, we saw more up movement. I mean, it just never ended. It was just crazy. And then this was the overnight. You can see this big move up overnight into the open on Thursday. It retraced back to this deviation line at the open or just after the open. And there was a nice trade here. This one we didn't get quite down to the green line to make an entry. It retreated back, so it was behaving a little nicer. And then here we had a nice move down. This would have been an entry. I don't remember if I traded on Thursday morning. I cannot honestly remember. And then it would have come back here. So what we do is when it hits this line, we enter a trade. We put our take profit on the blue line and our stop loss down on the red line. And you can see here, so you would have got a full profit. It never got up here to do a short. But then in the afternoon, it did get back down to this green line. But if you'll notice something, it never retraced back up all the way to this basis line. So we would have gotten in trouble here because we have to be we have to close all positions by the end of the market. So we really wouldn't have lost a lot of money. You could have closed out here and taken a half profit, or just closed out here with a small break even or slight profit. So you would have had one winning trade, no complete losers, but not a second complete winner. So then price leveled off. This is Friday now. Slowly went up into the market open, and then we had a huge down bar, brought price all the way back, and here just kind of fluctuated up and down. We did get a strange trade here in the afternoon. Look at this. I don't know if you can make this out, but look at this liquidity sweep. This was in the afternoon, about 1 in the afternoon. Look at this candle. Just crazy price action. And then we ended up just kind of coming back a little bit and leveling off into the close. Now, that's last week. Let's look at the week ahead of us. We don't have a lot of major news until Thursday. This is forexfactory.com economic calendar. There's a lot of Fed speakers. And here again, you never know what these Feds are going to say. We've been lucky that the last few weeks when they've been speaking, we haven't seen a lot of market reaction, but you know how that can change at any time. Then on Thursday, we're loaded with news early in the morning, the BRICS summit, unemployment. That could be a biggie because people are really watching employment rates. And then, of course, we got the flash PMI and new home sales. So we got kind of a little buffet or smorgasbord of news. This is going to impact the market one way or another. We just don't know which way, obviously, and it'll depend on what they release. But we will see some volatility there. And then on Friday, we've got durable goods coming out. Now, the big thing, though, that I think is going to be overriding in this marketplace is going to be the election. Markets do not like uncertainty. And at this point, it sounds like this presidential race is pretty much a toss-up. And then, of course, we've got a lot of geopolitical situations in the Middle East continuing to go on, which also adds uncertainty to the market. And as I said, markets do not like uncertainty. They like to know what's going on. Now, late in the week last week, we saw a big, huge increase in the price of gold. And I don't know what to fully make of it yet, whether people are just hedging or positioning themselves into gold. But watch the news closely this week, because there's gonna be some movement coming up here, one way or the other. We may see a move to the upside, obviously, depending on some of the big earnings from, like, say, companies like Google and Amazon coming up. You know, because the market is so heavily weighted with these technology stocks, primarily the semiconductors and the Googles and the Amazons, the Magnificent Seven, as we call them, that if their earnings come out really, really good, they can pull this market up alone. And I just want to show you here, this is a 4-hour chart of the MNQ, the NASDAQ 1000 futures. And just to show you where we've come from in the last few months. So just to give you a reference point, this is June of 24. My dog's acting up, I apologize. So from June, we went up, and we went all the way up here to 21, what was it, 3, which I believe was the high, right up to here. And it was almost not a straight climb, but it was as close as you're going to come to it. So we came up, we had one little pullback, consolidated, and then finished that run up. We hung around up here for a little while, and then we had the opposite, just kind of a slow grind down to August. Then in August, we retreated, and we made it about half to 3/4 of the way up back to that level. And then we had that pullback right into this range, which is 18,700. From that point, which was early September, we've been going up again. And let me get rid of that. I don't know where that came from. Let me just get rid of that. We came up, I guess I've got some old drawings on this chart that are getting in my way. Just give me a second to delete those out of there so it doesn't interfere with what I'm trying to point out here. So this is that mid 18,000 level, okay? To give you a reference, this is 21,000 up here. So we pulled back in mid-September, and we got up. I've highlighted this with this rectangle, kind of it was resistance early on. We hit it, pulled back, hit it, and then we were able to drive through it, stay above it. It acted as support then for a little bit, but then it came back down. And now it's been acting as resistance ever since. See, we came up, almost got bounced back down. We came up here in later September, got pushed back down. And then this line here now is a support region. It was resistance at one time. This is kind of support. And we've been kind of bouncing around in that area. Now we're heading back up, and we're going to be testing that again. Now, I've drawn this purple box here as to where price will probably remain over the next couple of weeks. To give you some scale, that area is 1,400 points worth of distance. 1,400, 5,665 ticks. And we're right in the middle of it. So we, that means we have, what is it here? We have roughly 800 points to the upside or 800 points to the downside if we remain in this range. And you can see we've been in that range as an upper range, you know, since going way back to June. Yeah, we spent some time down in this range as well, but I don't think we're going to get down there immediately. We may very well get down there soon, but it would be, I would think, after the election that we would do it. I don't see any huge upswing to try and break new highs or anything like a major crash. between now and the election, unless there is some specific black swan event that occurs, which is always possible, and that's what I'm talking, a 10% or more, type of correction. I don't see that happening before the election, but like I say, you just never know. So what I'm thinking is we're probably going to stay within this area till probably early to mid-November. Now you can see, I'm just going to move this back a little bit so we can see what's happening here. Let me just open this up a little bit. That we're coming back up. We almost got there. This is a 4-hour chart, remember. And we're coming to test it once more. So this will be a pivotal point. If we break through, then we definitely could go for a retest up here. It's about 800 points, remember. If we get rejected, I would look then to come back down to this, what is that, 19,700, 19,800 range, which would be an 800 points to the downside. Let's just look at this in the 1-hour chart to get a little bit more directions. I wish I could be a little bit more definitive, but obviously I can't. There's just too many unknowns out there right now with this election, the Middle East situation. But if you look at how these have been going, so we had a kind of an up wave there. Clone that. This is a 1-hour chart, remember. Another up wave here. Clone it. All leading to the same area here. This one didn't quite make it. Now we're above that on this wave. And so we will see what happens up in this area is going to be critical as to where this might, because one of two things will happen. It's either going to break through probably this time or come back down and drift around in this region, ultimately to here, and then either go again, or else then we'll start to see the downfall after the election. It's just, we just don't know. And so look for a lot of movement. I think we're going to be getting a lot of movement here. And so there is going to be a good opportunity to both scalp the NQ and to get some slow up and down movement out of the ES. So it's really a trader's market. We just have to be very cautious and use tools to make sure that we're going to be on the right side of the movement. If you get caught off guard on the wrong side, my recommendation is to take your losses as soon as possible. Don't let them stretch out. If you're wrong, you're wrong. I mean, taking losses is all part of the business, and how you handle that is the key. That it doesn't throw you off your overall plan. You have to factor in those losses. I mean, if you can win 70 to 75% of your trades and ensure that the winners are equal to or greater than the losses, you will be a successful trader. Being a winning trader is not hitting home runs. Those will come. You will get home runs mixed in. It's inevitable. The thing you don't want to have is consistent wins and then have that loss be an oversized loss, which then overshadows any of your wins. Consistency is the key. Base hits are not bad, my friends. If you're making trades where you're getting 10, 15, in some markets 5 points consistently, as long as you are, like I say, winning much more than you're losing trades, you're going to be in a great position. Now, before I close, there is going to be, I've been approached by so many companies recently, there is going to be some major changes happening in the future space. There is so much money being made by these prop firms that it's drawn the attention of a lot of people, both good and bad. So you want to be open-minded over the next couple of months, because you're going to see some companies coming out with some very innovative, different programs. And you're also going to be seeing some of the bigger players enter, names that we haven't seen before, but these are names that are known to you. Like I know Robinhood is getting into the futures market. Whether they will open a prop company, we don't know. But you're also going to see props. You're starting to see where props are offering direct to funding type accounts. You're going to see more of that. You're going to see companies where you'll put up money directly and you'll automatically go into a funded account, and then they will either match it or increase it. You're going to see a lot of innovative things, and just be careful. Don't get caught up with a company that sounds great initially out of the gate, but be diversified. Don't get married to any one company, because like I said, you're also going to see some things on the brokerage side. I know of at least one company that is going to be coming out in the next couple of weeks that is really going to give NinjaTrader a run for its money. I can't say anything about it now because I've signed a non-disclosure agreement with the company. Now, I've not been paid by them in any way, and I'm not necessarily going to convert to them, but it's a pretty cool company, and they've got a lot of cool things. And think of it like a NinjaTrader brought into the 21st century. I mean, a lot of innovative things and advanced tools. And this is the other thing you're going to start seeing is some advanced charting and indicator systems using AI. Technology is moving so rapidly, and it's being incorporated in every phase of the financial industry, especially trading. And so you're going to see a lot of that. The other thing to be cautious of is algos, or automated trading systems. Here again, I've been approached by many of them. I've looked at some of them. None of them, in my opinion, are truly automated winning systems. They are automated systems, and they will trade for you automatically. However, they're not based on a winning formula that will bring consistent winning results for you. And they're very expensive, very, very expensive. So just, be alert. Learn how to trade at least one system successfully. Once you've mastered that, you can scale it and then add additional systems in once you've mastered the one. Also, once you've mastered one market, try to introduce another market. Like what I've done is I've pretty much mastered NQ, and so now I'm starting to trade more ES as well. I've got a good system for that, and so last couple of weeks I've also started trading gold, GC. It reacts totally different, and it's very very strange going to a new market like that, because you always want to compare to something you've known, and when that behaves totally different, you can start to make a lot of mistakes. Keep an open mind always, and always be learning. Okay? I got to go, but thank you so much. And I will talk to you tomorrow, I would say almost 100%. And I think tomorrow's going to be a good day. I don't think we're going to see huge moves, but then again, you never know. So just be on your toes, and thanks for watching, and talk to you soon. Thank you.